Hey, good morning, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comment for Thursday, the 20th. Remember, December options expire tomorrow. If you have any December options, even if they're December short dated, whatever, what have you, they expire tomorrow. Overnight, 3 cent range in corn finished roughly unchanged, up 3/4 cent. Soybeans, 9 cent range, finished up 1 3/4. December wheat, uh, about a 7 cent range, finished up 3 3/4. I'd say a quiet night. The one thing I wanted to share with you right away is the commitment of traders. You probably already have heard about it, unless you haven't. So here we go. We had the funds short about 70,000 corn. They are currently short 135,000. This is as of the latest commitment of traders report from the CFTC. So they went from short 30 to short 135,000. They had been short wheat, um, about 70. They've added that position. They're short close to 199,000. Soybeans, they had been long 105. A lot of people thought. The latest data from the CFTC shows them short about 38,000 contracts. They're short 50,000 contracts at KC Wheat, about 26,000 contracts of Minneapolis Spring Wheat. They're short about 1,500 contracts of bean oil. A lot of people thought that they were long bean oil. Soybean meal, they've increased their short. They were short about 70. They're short currently about 117,000. And that is that's it for the row crops. Moving over to the cattle. Fat cattle, live cattle, they're long 116,000 contracts. That's not a record long. The record long was 156, but it's still a good long bet, 116,000. Feeder cattle, they are long 23,000. Again, that's not a record. The record long bet was 37.8. So they're still about 14,000 under that record long. Lean hogs, however, they have a record long position, 146,288 contracts, which kind of boggles the mind. They've just been getting absolutely hammered on this correction. Um, okay, so that's the number one thing. We'll see how that's going to play out for the managed funds. It's going to be an interesting Christmas party for those guys. If they were, if those numbers are true, they've got some losing positions on. So we'll see how it plays out. Levels to watch today. We've talked a lot about the amount of open interest of both puts and calls that are in December corn at 430. We had a tremendous rally, and we gave back about 35 cents of the beans in a couple days. If you do the top to bottom correction that we've had so far in jam beans topped out the other day. Excuse me. Two sessions ago, they hit 1169 and a half. Last night's low was 1130. So that is a 30 to 69. We're gonna go ahead and call it a 40-cent haircut in 72 hours. We're still north of 1125, but I would expect to see more and more daily swings in the beans of 20 to 30 cents. I just don't think that's going to go away until we figure out what's going on with the actual China sales, what these managed funds are going to do with their shorts. And so the setup is good. If you're a producer, I always tell people, don't worry about the whys. Just try and make the best of the opportunities that we've been given. And I would continue to look for that type of movement. And what do we got to get through? Well, we got to get through the rest of the month, and then we have a December USDA. I think the big USDA report is going to be the January one. Um, that's going to have so much information in it that historically that's been a big number. I think this year in particular with the shutdown, it's going to be even bigger. As far as the feeder and fat cattle go, finished lower yesterday. It did come off of limit. They had been limit down. They came off. March feeders came off about 4.5 cents from limit offer. I'd expect another 10-cent range today in the feeders with the lean hogs. They managed to end the day higher. We After making a new 4-month low yesterday, for all my clients, we did try and roll down as aggressively as we could our hog protection because we have had a little more than a 50% correction, 50 to 60% correction of the rally that we had from April to October. We had the $25 rally. Yesterday's low was a big percentage correction. I'm not saying it can't go lower. I'm not calling bottom, but um, we did try and take as much money off of deep in the money puts as possible because we just don't know. And I'd rather have a put that's worth um, 2 cents go worthless if we rally than a put that's worth 7, 8, or 9 cents. That's why we manage the puts. We don't, since we don't know what's going to happen, we try and get paid on those puts. We still kept the floor. I mean, we've got the upside open, but that was the strategy there. And sorry, so it's going to be an interesting Thursday. This is Chris Robinson. If you need help, I am going to be posting the private client webinar today. Um, should go out in a couple hours. And again, I think you got to get ready for DEES options expiration tomorrow, and we'll see how we trade today. This is Chris Robinson, 312 638 8868. Have a good day. Give me a call.